Hi, this is Moses Goldman, and in today's video, I'm going to talk about call options, option trading for beginners, options for beginners, how to trade options. But then I'm going to talk specifically about call options. I see it on the internet and people get so confused with options. By the time I'm done with this video, you're going to fall in love with call options. You're going to fall in love with option trading. You're going to love to want to trade options all the time because options are so awesome. I tell you this, options or option trading is just awesome. It's just fantastic. And by the time I'm done with this video, you're going to understand options so clearly. It's going to be so easy for you to trade options. And then I'm going to teach you everything that you need to know. All right. With option trading or options for beginners, a lot of people confuse people by telling them, oh, you have to know, you have to understand implied volatility or IV. You have to understand implied volatility. You have to understand options Greek. You have to understand spreads. And no. You don't need to understand nothing. You don't need to understand none of those things. All those things keep confusing people. That's why options people are so they don't understand options because they get confused with the option terms, option Greek, option spreads, option implied volatility. You don't need any of them. At least in your first 3 to 6 years of trading options, you don't need that. After 6 years or after 3 years, after you make a lot of money from options and you want to learn some advanced stuff, then fine. But for now, you don't need any, advanced, ideas about options. Just keep it simple, keep it basic. Focus on the basic understanding of options. All right. So in this video, I'm going to talk about call options. Call options. What is a call option? Call option is a contract. All right. So when do you buy that contract? Contract on a stock. Let's say a contract on Tesla or Apple or Nvidia or Google or Facebook. It's a contract. All right. And when do you buy the option or the call options? When do you buy? Just focus. This is the key. This is the key. When do you buy a call option? You buy a call option when you feel or when you are sure that the stock is going to go high. Let me repeat that. You buy call option when you think that, or when you feel that, when you are convinced that the stock is going to go higher and higher and higher. This is how you buy call options. So let's say Tesla stock is $1,000 and you think that it's going to go to $1,100, then you buy the call option and you wait a little bit until the stock goes higher and higher up to like 1,100 or near that point, and then you can sell it. Or you can sell the contract, the option contract or the call option. You can sell the call options whenever that you think that it's made a profit or it's profitable or it's in the money, So this is all you need. Let me give you an example of buying call options. Let's say oil prices, crude oil prices are going higher. Then you want to find 1 or 2 crude oil stocks and buy options in those stocks. All right, let's say Exxon. You think that crude oil is going higher and higher and higher and higher. Oil prices are going higher. And then you research 1 or 2, places here and there, and then you're convinced that you're sure that crude oil prices are going higher. Then you buy call options in, say, ExxonMobil, or Chevron, any other oil stock, or Apache, or any other oil stock, Devon Energy, all other crude oil stocks, So this is how you buy it. Look at, when you want to buy call option, think about your chance of the stock going higher. That is the only thing that you need to focus on. Forget about implied volatility, forget about option Greeks, forget about spreads and all that. All those things keep things complicated, at least for the beginner. This is for the beginner. You know, when you're starting to trade options, you don't need any of those things. All you have to do, especially if you're buying call option, is to focus on the chance of the stock going higher and higher and higher. If you feel that the stock is going to go higher, then buy the call option. This is it. This is it. This is call option 101. This is simple and simple and simple and simple. Keep it simple. Look at the chance of, just focus on the chance of that stock going higher and higher. Does that stock have a chance of going higher? Is it going higher? Are you sure that it's going to go higher? Yes. If you are, then buy call options. But what you buy is that you buy the strike price. The strike price must be as close, to the current price as possible. At the time that you are buying, let's say Tesla stock, it's trading for $1,000 right now as I'm talking to you. I want to buy call options in it. Then buy the strike price as close to the 1,000 as possible. Maybe 1,010, 1,005, 1,000 or 995. Something close. Something close. It's called at the money. Keep it close to the current price. The strike price must be as close to the current price as possible, so that as the stock moves up, then your call option will be in the money, and then you'll be able to make a profit. This is the secret. That's all you need. You don't need any implied volatility. You don't need spreads. You don't need to learn any option Greek. All those things will confuse you. Just forget about it. At least in the first 3 to 6 years of your options trading, forget about all these advanced terms. You don't need them. All you need to focus on is to make sure that the stock is going higher. If the stock has a higher chance of going higher, and you are sure, you're convinced that it's going higher, then buy call options. It's called probability. Does the stock have a higher probability of going higher? If the probability of going higher is high, then buy call options. This is as simple as that. Is the stock going higher? Does the stock have a higher chance of going higher? Are you sure that the stock is going to go higher? Yes. If yes, then buy call options. So one, buy a strike price that is very, very close to the current price. Let me repeat that. Buy a strike price that is very, very close to the current price, so that when the stock goes up, then your call options will be in the money, and then you make a profit from it. This is the first one. The second thing you need to know is that you should give yourself time for the trade to work. You shouldn't go in and buy call options that expire like one day, or expire 1 week or 2 weeks, or as much as you can, buy something that expires in, let's say, 1 month. Let's say 2 months, let's say 3 months. This is the safest bet. All right. Or 6 months. If you have the money to buy 6 months contract, then buy 6 months. If you have money to buy 1 year contract, then buy 1 year contract. If you have money and the resources to buy 2 years contract, it's called leaps or leaps options. Then buy leaps options, something that expire 6 months, 1 year, 2 years or more. This is how you do it. In this case, you are almost guaranteed that the stock is going to go higher. You're giving yourself enough time for the stock to go higher, because option prices or call option prices are so volatile. They keep going up and down so fast, so big. So if you go and buy an option that is so short, the expiration period is so short, like 1 day, 1 week, 2 weeks, that it becomes so volatile and your chances of loss are so higher. But if you buy a high quality stock like Facebook, like Apple, and you lock in, the option, the call option, you buy call option expiration, of about 2 months, 3 months, 6 months, 1 year, 2 years or more, then you have a higher chance. You have probably 90% chance of making a profit, or even 100%, almost guaranteed that you're going to make a profit in that stock, as long as that stock is a high quality stock. So when you're trading options, you don't need to bother too much about all these things. They are just going to confuse you. You don't need spreads. You don't need implied volatility analysis and all that. You don't need options Greeks. You don't need none of that above. All you need to focus on is to make sure that the stock that you're buying has a higher chance of going up. Of the stock has a higher chance of the price going higher and higher and higher and going up. Let me give you an example. Maybe the stock just announced earnings, and they made huge earnings, and people are going in high volume. More people are buying it because now that the earnings are going up, the company is making huge, boatloads of profit. And so the stock is going higher and higher. Everybody's rushing to buy. Institutional investors, like hedge funds, pension funds, college funds, high net worth, family funds, billionaires, millionaires, sovereign wealth funds, pension funds, all these high net worth, smart money banks, Goldman Sachs, huge companies, like huge banks like Goldman Sachs, institutional investors, college endowments. These are the money managers. These are the institutional investors. These are the smart money. They are rushing to buy. Why? Because the company has announced earnings, and their earnings are going through the roof, and for that reason their stock is going through the roof, and the stock has a higher probability of going higher. Or let's say the company has discovered gold somewhere, or discovered oil deposits, or they just signed a new contract with China, or they signed a contract with the federal government. Something, they announced some great news, some good news, some groundbreaking news that maybe they won a $50 million contract with the U.S. Army or U.S. Air Force. Something like that. Or they've just been awarded some copyrights, something like that, some good news like that, then you know that the stock has a higher probability of going higher and higher. The stock has a higher probability of going up. And so you buy call options and you wait. One, you've decided, you are convinced, based on your research, you are convinced that the stock is going to go higher for all the reasons that I've given you. Maybe earnings, maybe news, maybe contracts, maybe something great is happening in the company. All right? So you're convinced that the stock is going to go higher. That is one. Number two, you buy at a strike price that is so close to the current price. The strike price must be very, very close to the current, price of the stock. That is number two. Number three, give yourself enough time so that your trade is going to work out. So don't go out there and buy a contract that will expire in 1 day or 1 week or 3 days or 2 weeks or even 3 weeks. No. It's too risky. So give yourself enough time for the trade to work. So buy some contracts that will expire, call option contract that will expire like 3 months, maybe 1 month, minimum 1 month, 2 months, 3 months, 6 months. Leaps, you can buy leap options. Leaps. You can buy something that expire in a year, in 2 years, in 3 years. You have to guarantee that you're going to make a profit, almost guarantee that you're going to make a profit. And for that reason, your contract must be long dated. Your contract expiration must be in a far away distance, Buy 2 months contract, 3 months, 6 months, 1 year contract, 2 years contract. And also number four, buy the highest quality stock. Don't go and buy options or call options in some funny, some unknown penny stock. No, you're going to lose money. Instead, buy in the highest quality stocks in the land, like Apple, like Facebook, like Google, like Nvidia, like AMD. This or the SPY ETF, SPY ETF, or the KQQ ETF, or TQQQ ETF or DIA ETF or IWM ETF. You will focus on the highest quality stocks in the land. Buy the highest quality stocks in the land and buy longer expiration. Minimum 2 months, 90 days, or 3 months, 6 months, 1 year, 2 years leaps. All right, this is how you trade options. This is how you trade options. So forget about everything else. Spreads, it's going to confuse you. Option Greeks, oh my Lord, it's going to confuse you, you know, and imply volatility. You don't need anything. You don't need anything. All right. So focus on exactly what I said. And if you do exactly as I have said, look, I'm profitable in options. I've been trading options for years and I'm profitable. And then I've been trading stocks. I've been trading options for years and I'm profitable, you know? So I'm going to teach you how you can do this. If you want more details, if you want specific step-by-step details, if you want me to hold your hand and help you out, I have a course, an online course, and I'll teach you exactly how to do that. And on top of that, I have a 90-day guarantee. I will guarantee, and I'm guaranteeing that if you buy my online course, you will be a profitable trader. You'll be a profitable options trader. You'll be a profitable call options trader. You'll be a profitable stock trader within 90 days of completing my course, or your money back guaranteed. No questions asked. So click on the link and let's work things out together and let's get down to business and let's make money in call options. So this has been a video on how to trade options for beginners, call options for beginners, option trading for beginners. And I hope you like the video and I hope you subscribe and I hope you like the video and comment. Thank you. Have a great day. Bye.